Good morning, James. How are you?
Hi Leo, I'm good thanks. How are you?
I'm all right, thank you very much. Yes, looking forward to a quiet weekend with the computers off.
Yes, I think we all are.
Yeah, excellent. James, we've been catching up with Caroline and Gary about the markets and how things are going with the funds and the economy, etc. Could we get a brief update from you on the monthly market summary?
Yeah, sure. Well, to say it's been a volatile month for markets would be a huge understatement. The outbreak of COVID-19 has created huge amounts of uncertainty, and that's been reflected in the stock market. So the FTSE 100, for instance, that's off 13.4%. It's had its worst month since 1987. Of course, the FTSE 100 just measures the largest UK companies, and so medium and smaller companies, as you can imagine, they've been hit even harder because obviously they're going to struggle more to survive. So the FTSE 250 and the FTSE Small Cap Index, which measure medium and smaller companies respectively, they've both lost around 25% during the month. And of course, it's not just the UK. In the US, the S&P 500 index is off 12.4%. In Europe, of course, Europe's been struggling particularly with the virus outbreak. So the Euro Stoxx index is off just over 16%. And emerging markets have also been struggling. They've lost just under 13%.
Wow. So, amongst all this, there's some things that have been going well. We've heard that much. Now, can you give us a bit about that? I think oil isn't one of those things.
Yeah, so oil, as if stock markets didn't have enough to worry about in the last month. On the 9th of March, which was dubbed Black Monday, it was revealed that Saudi Arabia had started an oil price war with Russia, and that sent the price of oil tumbling to historic low levels. So oil has been one of the biggest losers, if you like, during the crisis so far. But as usual during crises, it's the more safe assets which tend to do well. So things like gilts or UK government bonds, they've been more or less flat during the month. But not all bonds have done well. So corporate bonds, which are more risky than government bonds, they've lost around 7% during the month. And high yield bonds, they've been struggling even more. They've lost around 13%. So it's not been good for all fixed income securities. And the other thing which tends to do well during crises is the dollar. So the US dollar has had a particularly good month. In fact, sterling has fallen to its lowest level against the dollar for 35 years. It fell below $1.15 at its low point a couple of weeks ago.
Wow.
And the pound has also struggled against some of the other major currencies, such as the euro and the yen. It's lost around 3% against both of those as well. So the pound has struggled.
Wow. James, we've had an insight from Caroline, Head of Funds and Asset Management, and from Gary as the Chief Investment Officer. How's life as an analyst at the moment?
It's interesting, to say the least. I mean, we've been doing a lot of work in the last couple of weeks looking at individual stocks. Obviously, some have been hit harder than others. Of course, that creates potential value opportunities. So we need to determine which stocks are most likely to recover once the worst of the virus is over, and which stocks might struggle. So we've been doing a lot of work looking at those. Yeah, as for working from home, I'm just about getting used to it. I don't miss the getting the train into the office every day. But yeah, it's been a learning curve to say the least.
Sure. Well, it's good to see you, James, and we're all connected very well.
Yeah, it's gone well, hasn't it?
Absolutely. So, well, thank you for the insight. We'll have the written commentary supporting this. It seems that there is a little bit more activity on the roads at the moment this morning, so if there is a bit of background noise, ladies and gentlemen, I'll apologise for that now. James, thank you very much. You have a good weekend.
Thanks, Theo. And you.
Take care. Bye now.